Welcome back, traders. For today's video, we are going to be previewing the upcoming CPI print that is dropping tomorrow morning at 8:30 a.m. We're going to dive into the investor expectations, what some big banks are saying could be the likely outcome, and lastly, we're going to talk about how we are trading it. Let's dive in. Now, I don't think it's any secret that inflation rates around the world are coming down. The previous CPI report came in at a year-over-year reading of 7.1%, and economists are expecting that this print tomorrow is going to come in lighter at 6.5%. Remember, as a market participant, it is not about the actual data point itself. It is always about how the data looks in comparison to the expectation. The market outcome, depending on whether this print comes in at, let's say, a 6.4% reading tomorrow, which would be lighter than the estimate, could be drastically different than the market outcome if this comes in at 6.6%, which is still a deceleration, but would be slightly above that estimate. JP Morgan put this piece out. It has been circulating through Bloomberg and through financial Twitter, and their thesis is that the inflation figures are likely to come in cooler than expected, which would help stocks extend a bear market rally. We are seeing other analysts that agree with this take by JP Morgan. This is a snippet from the Economics Uncovered newsletter on Substack. This guy Steve writes it. He is also estimating that we're actually going to have a month-over-month sequential decline in the CPI, and that the year-over-year change could come in at 6.4%, which would be below the 6.5% consensus. But on the other hand, another one of my trusted sources for this inflation data, which is Trueflation, is saying something slightly different. In their tweet, they say that the market consensus for this release is 6.5%, but the Trueflation community forecasts a slightly higher inflation at 6.8%. Furthermore, they have two forecasts for the December CPI. One is at 6.4 and the other's at 6.5. But they mention here that the community model, which is at 6.8%, has historically been more accurate than their own. If the community model ends up being accurate once again, that would be a much higher than expected inflation print, and that could really upset the market. It's become clear to me that the market is front-running a lighter than expected CPI print. This right here is a chart of the year-to-date performances of some of the most highly shorted and hated ETFs in the marketplace. The ARK Innovation ETF is up 12.77%, and our blockchain ETF is up 10.11%. These small caps are also up almost 5% year to date. So we have the economists that are expecting a slowdown in inflation. Then we have the analysts and market participants that are also expecting numbers even lighter than what the economists are expecting. And we have a market that is front running this potentially lighter than expected print. Here's what the options market is pricing in as its implied S&P 500 move into Friday, January 13th. The options market is pricing in that we could move all the way up to about $402 for SPY, or obviously if we get a negative reaction, could go all the way down to $384.03, which is about a plus or minus 2.25% move. If the report comes out better than expected and suddenly we get this jolt right up to 402, this technical picture is going to look pretty doggone good. We'll be above the 200-day simple moving average, and we will be challenging the prior highs from early December. However, if this inflation report does not meet the expectations and we find ourselves down at 384, suddenly we are right back in the chop zone, and I don't really see many more catalysts that would bring the market higher. Only God and liars truly know how this CPI report is going to impact the market. So here is the trading plan that I shared with Pristine Capital members earlier on in the session. We got pretty aggressive on the long side of the market earlier in the month, and we've been selling into strength over the past few sessions. I did go ahead and sell my Taiwan Semiconductor on the open, and I plan on coming into the event with very light exposure to the market. You really have two options here. You could pick a direction which is perfectly fine. In one case, you'll look like a hero. In the other case, you'll look like a zero. Or you can just say, hey, I'm going to come in a little bit lighter on my positions and trade the market after the numbers come out. My game plan is to prepare a short list of stocks to purchase if the CPI print comes in below the expectations, and then also prepare a short list of potential hedging trades to put on if the CPI comes out way above the expectation. If you'd like to see the short list that I'm putting together, visit pristinecapital.substack.com, and I'm going to detail that game plan in tonight's newsletter. Even if you just decide to opt into the free version, I pride myself on having free content that is just as good or better as other investors' paid content. Best of luck out there as we head into this CPI print. It's going to be an epic day in the market. I can already tell. Thanks so much for watching.